on our radar. It was a soft quarter for the company. Their CFS business, the container freight station business, dragged down further, although rail revenues have surged nearly 12%, as a result of which the stock higher by about 3.5%. Prem Kishan Gupta, who's the chairman and managing director at the company, joins us now. Thanks a lot, Mr. Gupta. In the first quarter, like you pointed out, there were a couple of setbacks. There was Biparjoy cyclone, the double stack restrictions that came in from the Indian Railways. Have all of those problems gone behind you now? How's Q2 looking, and what's your volume guidance for the year?
See, we were doing quite well, and even the volumes were there. But because of these restrictions on the rail movement, both on double stack restrictions as well as port being closed and trains halted, on en route to the port or from port to our ICDs. We could have done much better. There is a backlog which is still lying there in the port, which we have started clearing from July onwards. And from second half of July, things have improved, and congestion at the port, which was also a factor, in evacuating the containers from there, that has also come back to normal. So not only that we will have the backlog that we will clear in this quarter, but we will see the fresh arrivals and even pick up in the exports. So we think that we will be doing well in this quarter, and our guidance still remains double-digit growth, say 15 to 20% by the end of the year.
Okay. Well, you've stated, sir, that you're on track to finalize new locations to expand the container terminal network. What is the amount which is earmarked for this CapEx? How many terminals are you looking to build?
See, we are actively looking at 3 locations. So whichever finalizes first, we'll start that. So out of 3, I can say 2 are very close, that we can buy the land and then carry on with the construction and all the permissions. So each terminal of these would be, say, about 100 crores each. And we expect that we will be able to complete this by end of 25, these 2 to 3 terminals.
Okay, so what's the current land bank that you own? Will you ever consider selling any of this land? And if you do look at selling at some point in time, what would the value be?
Well, we have more than 500 acres of land, prime land, and the prices have shot up like anything in those areas. But it's a question of whether we monetize the assets or we, carry on the business from there. We have identified some parcels of land which we can give up, and which whenever we find a buyer, we are looking at it, and we will, because we will not be requiring those parcels in the long term, not even in the long term. So we would like to sell those pieces of land, and one of them we might sell within this year.
Wow, that's interesting. You will send one of the pieces of land in this year itself. In fact, of the land that you're looking to sell and monetize, how much can you make out of that, and what's the size of that land?
See, we are looking at about 50 acres of land to be sold at 2 locations, and the value of these will be roughly about 100 or 100 plus crores. And one of them is a prime location, so that is what we hope that we will be able to sell it quickly. There is interest from some real estate developers, and not from the container operators in the industry, but real estate or warehouse funds, who are looking at it.
Okay. Sure, Mr. Gupta, what then is the expected jump in volumes as well as revenue post all the capex coming on stream?
See, by 25, we are aiming at 500,000 TUs from the present 350,000 TUs. So that will be a good 30%, more than 33%, addition to the last year volumes.
Okay, so let's talk about the operational performance then. What is the targeted EBITDA margins that you have in mind? And in both the CFS and the ICD business, what are we looking at in terms of an EBITDA per unit?
CFS, no, the prices won't increase, but it will stay at this level. So we are having a EBITDA of 2,100 rupees per TU on the CFS side. On the rail side, we in this quarter we had 9,100, but we had in the last quarter 9,400 margin. But because of imbalance and the double stack operations, we ended up with lower margin. Our target is to have 10,000 rupees per TEU margin in the long run.
All right, 10,000 rupees per TEU as a long-term margin target is what you have for your rail business. And we always ask you this question, and this time it happened in the quarter that we're in currently in June. You went ahead and increased some stake in Snowman Logistics for a price lower than the IPO price itself. The question is, are you looking to increase some more stake in Snowman Logistics?
We bought 1.5% last quarter. So, and that was at an average price of 42 rupees, whereas our IPO was 47. And depending upon our cash flows, which we expect will improve further, in the coming quarters, we will consider buying again under the creeping acquisition, but the timing is not known. So we see Snowman as our core activity rather than an investment. It was an investment for sale when we did the deal in 2019, but not anymore. The company is doing well. You have seen the results, and we will continue to do better in Snowman with various new activities in that company.
All right. Thanks a lot for joining in. I think the street definitely likes what they're hearing from you. The stock is up almost 5% right now and is at trading closer to the high point of trade. Let's slip into a quick break. On the other side.